Which accounts are we looking at today? Rebecca, who do I have coming in at 11 o'clock? Okay. Okay, yeah. I just need to do just a cursory review of their account. So, let's see. Okay, well, they should be here any moment. Don't really have that many in-person meetings anymore. All right. Okay, so, yep. That all looks good. Let's just make sure they've got some appreciation. Okay, this one's doing really well. This one's doing really poorly. All right. Okay. All right. Oh, come on in. Hi. It's good to see you again. How are you? I'm doing well. Yeah, we're actually doing very, very well today. So, yeah, so if you see me drinking just a little bit of champagne, it's just because the markets are doing incredibly well right now. Yes. And here we love to celebrate when we're up. And well, when we're down, we just won't talk about that. So how have you been? Okay, good. Well, congratulations. I'm glad to hear that. Yeah, so listen, what can I help you with today? Okay, excellent. Yeah, so let's take a look at your account to date, and then if you're thinking about putting in some additional investment, we can definitely help you to allocate that money in a very economically and tax efficient way. How does that sound? Good? Okay, perfect. So, if you don't mind me asking, can I just confirm that your account information is all up to date? Okay, perfect. So first and last name. Okay, so you did have a name change. All right. Perfect. Glad I checked. We can definitely get that updated for you. No problem. And then do you want to add your new baby as a beneficiary on the accounts? Okay, perfect. Well, we will go ahead and get that in there. What is their name? Oh, just don't mind her. She's just, the office dog. Somebody probably spilled some cake on the floor earlier, Okay, and then what is their date of birth? Perfect. Okay. And then spouse name, still the same? Okay. Address? Okay, so you did move. Well, that's hopefully exciting. Okay, great. Well, I think we have all the informational stuff out of the way, so we can go ahead and just get right into it then. Oh, I did ask, did you want a glass of champagne? Yeah, I mean, we've got them sitting here for all the clients. So here you go. Absolutely. Yeah, I mean, if we're celebrating, we're celebrating. What can I say? Work hard, play hard, you know? We gotta enjoy the good times and just roll with the bad times. Although we don't talk about those. Yeah, we don't like to talk about that. But thankfully, fortunately at the moment, things are great. Things are just peachy. Markets are very, very up. So that's excellent. And I think we should go ahead and get started in investing in some new stocks and bonds and some exchange traded funds right away. How does that sound? Okay, perfect. So I see that we have you currently invested in some Rivian stock. Yes, the car. Now, I will say, well, you've gotten, it looks like a 6% rate of return on that, which is pretty good. I mean, it's actually, it's a little bit lower than the interest rates right now, so it's not great, but it's okay. I think we might want to move some of those funds into maybe like a more stable, more traditional older company, potentially like a Johnson & Johnson or a Procter & Gamble, or if you want to stay in the automotive industry, we could consider moving it over to maybe like a Ford. I don't know if I would invest in, I don't know if I would want to put some of the money into the international car corporations right now, just given, you know, the current tariff situation, and, well, just overall the current, you know, president of the United States trying to bring lots of manufacturing back into the US, specifically in the automotive industry. So it may be a good idea to invest in an American automotive company if you want to stay in that industry. So let's take a look at Ford and Chevy. Let's see. Not that there's anything wrong with Rivian, but I just would like to see a little bit of a higher return on that. And then being a relatively new company, there's just a little bit of uncertainty, which isn't always a bad thing. So if you want, we can maybe take half of it out if you're okay with some of the risk. What are your thoughts on Skechers? Well, looks like Skechers is up right now, so we could buy some stock in Skechers. Skechers is going private soon, so that's interesting. Didn't realize that. Maybe we don't want to buy that after all. Let's see. Does Crocs have a stock? I mean, those Crocs, like, they are just raking in the dollars these days. Do you want to get in on that? Perfect. So I guess before we go all the way in, why don't you tell me how much you want to invest today? Okay, so then we can kind of build our strategy based on that. So where you're at right now, I mean, you're still probably at least 30 years away from retirement. So at this point, I say that we continue building out just that more aggressive, higher risk, higher return strategy with equity and stock investments, making up the majority of your portfolio, and then of course just filling in with some bonds where needed. How does that sound? Yeah, I mean, you're not planning on pulling it out anytime soon, right? So it's not about timing the market, it's about time in the market, right? Exactly. All right, so we'll go ahead and get some of those Crocs shares lined up. Now, did you want to sell some of the Rivian shares, or do you want to keep those? Okay, we'll go ahead and keep them for now. Like I said, normally 6% is a pretty good rate of return, or it's at least, somewhat average, but just given the current economic situation and the higher interest rates, the 6% rate of return isn't as good as it otherwise maybe would have been a few years ago, right? Okay, so we'll hold on to those, and then go ahead and get some Crocs. Okay, what else? Sometimes just have to reply immediately in this business. You know how it is. Okay, let's see. What else should we get? So I am always a huge advocate for the tech stocks because they just tend to do so well. At certain times, obviously we've seen them decline, but over time, technology stocks tend to be a very good investment. Now, obviously, you already own some Google or Alphabet, some Apple, some Amazon, some Nvidia. Do you want to expand your investments in these? Looking at Nvidia, you were one of the early investors, so you do have over a 500% rate of return, which is not normal, but incredible. And I would just like to pat myself on the back for that one. Looking at it right now, it's up a little bit today, but Nvidia constantly seems to be increasing its earnings potential, so I think that that's an excellent investment. Obviously, Amazon, we all shop there every single day, just about. So I think, if you have additional funds that you're willing to invest and you want to put them in the technology industry, Amazon's always going to be a great option. I always give this advice to my clients. Anything that you like to buy is a good investment, right? Because it means that they're doing something right. They've got a good product. They've got a good service. So, speaking for just myself, I do own a lot of Amazon stock because, our house gets a delivery almost every day. So, what else is going on with Amazon right now? Apple is down for today, but it's not down by much, so I'm not really very worried about that. So let's get some additional shares of Nvidia, some additional shares of Amazon, and I think we'll just leave it at that for the tech for today. Yeah, we don't want to go too heavy on that. All right, so let me go ahead and put in those orders. Got some retail, we've got some technology. Maybe we want to look into some travel, maybe like a Delta or an Alaska Airlines, or a cruise line, or hotels. What do you think? Yeah, so right now, let's see, you own a little bit of JetBlue, a little bit of Delta, a little bit of Carnival Cruise. Now, looking at all of these, Delta, Delta's probably the best performing in your portfolio. Since you've been investing in Delta, you have made 65%, so it's very impressive. Personally, I love Delta, so what do you think? All right, we'll go ahead and add some additional Delta shares. Oh, hang on, I got a message right here. That can't be right. That cannot be right. So I have some good news and some bad news. Which would you like first? Okay. So the bad news. The bad news is that the President of the United States decided just a couple minutes ago, I just got this news in just now, it's just breaking. He's decided to up the tariffs again with China, and then China's decided to up the tariffs again with the US, and then US has decided to up the tariffs again with China. So yeah, well, the stock market, it's a little bit finicky. It's not really reacting the best right now. And unfortunately, all of the stocks that we just bought just declined. So that's the bad news. The good news, yes, you have your champagne. We've got plenty. We have plenty. The good news is that now stocks are on sale. Yeah, they're having a huge sale. So you are here at just the right time, okay? Just the right time, because they are heavily discounted at the moment. So I know that we already bought a few, and unfortunately, we can't undo that. And if there was a way to travel in time and undo things, then I would probably be a lot wealthier. We cannot undo that, but we can move forward and buy the rest of your stocks on this discount. So how does that sound? Perfect. Yeah, so I know it's not really, it's not the best. I'm just trying not to think about all my other clients right now. Oh God, this day is going to be a hard one. Wow. And it's only 11:15. All right. So what else? What else can we do for you? Now, we haven't discussed ETFs yet, and I think that ETFs, or electronically traded funds, are an excellent option for you. You're already invested in many of them. I think that one of the benefits of the ETF is that it's already diversified. So, our job is to help you diversify your portfolio. The ETFs naturally will do that for you. For example, you are invested, I believe, in, let's see, where is it? Spider S&P 500 ETF. So this one is your best. This one has 130% rate of return on it. Off the top of my head, I'm not sure what companies this owns, but I'm assuming that it's a combination of some of the S&P 500s, right? So this fund owns a bunch of those companies, and so by its own nature, it's already diversified. As such, these shares tend to be a little bit expensive. Well, right now they're on sale, so they're actually, only $400 a pop compared to $600, so it's not bad. So typically they are more expensive, so if you would like, we can continue to invest in Spider. That's been the best performer. I also tend to love VGT, Vanguard Information Technology. Let's see, there's some Fidelity ones that are more specific. Fidelity Energy, Fidelity Utilities, if we want to diversify even further into more specific industries. Yeah, unfortunately, most of these are down right now, but like I said, they're all on sale. So let's go ahead and get you some of these funds. Yeah, I think that's going to be a really, really great move for your portfolio. And I think, I know that was not the best of news, but I think you're going to be very happy moving forward. And what we learn here, what did we learn today? We are not going to sit here and look at our portfolio count and check the values every day. No. Maybe we'll check it every few months. Certainly not every day, because we will go absolutely bonkers. Okay? So I'll go ahead and put in a few orders for those. In the meantime, I think we haven't talked about bonds yet, but I want to get you invested in some additional bonds. Bonds are pretty good investments right now just because interest rates are higher. So I definitely want to get some of those for you, also because it helps to diversify your portfolio. And as we discussed, you are younger, you still have years and years until you're wanting to pull this money out for retirement. So in general, all of the downs that we're experiencing from the tariff war, they're going to be made up over the next 30 plus years. And then some. Yeah. Exactly. So I don't want you to fret. I don't want you to worry about it. My clients that are closer to retirement, it's a little bit harder to tell them that same story, obviously. Another thing I wanted to discuss with you is, so have you considered setting up any sort of tax protected savings plans for college for your new baby? Okay, because we can definitely help you with that. There's 529 plans and additional accounts that we can help you set up that are very tax efficient and will help the money to grow tax-free and be able to be also pulled out tax-free if it's pulled out and used for educational costs down the road. If you expect your baby to go to college and utilize them. If not, then it would just be taxed as regular income. But a lot of my clients like to set up these plans just so that they have something in place. And there's many options, also just depending on, the state that we're in. Yeah, so, okay, well, I'll go ahead and make a note of that. And then maybe next time you come in, we can go ahead and talk about that, because I know it's still very, very early, right? Yeah, I know. They can't even talk. Like, how are you supposed to know if they're gonna want to be an architect or an engineer or a dancer or a baseball player? Who knows? So many options, so much potential though. So exciting. So exciting. Okay, so I'm just putting in some of the orders for those ETFs and the bonds, and then I think that's probably gonna solidify the position for today. Okay, are you doing good on your champagne? Do you need any more? Do you need to take a whole bottle home with you? You're not retiring soon, so. I'm getting blown up left and right. I'm just trying to assure my clients that it will correct itself. It's so tricky when, the stability of your financial future just lies upon the whim of one person, right? It's a little wild, isn't it? Okay, so I think that about does it for today. So like I said, overall, the performance of your portfolio, it was up 135%, mostly due to the Nvidia stock before we started chatting today. Now it's up 90%. So okay, that's not terrible. That's still pretty good. Obviously, most of that is due to Nvidia. But yeah, so because you were a very, very lucky initial investor in that company, and that company has done very, very well. And rest assured that I am constantly doing research to find the next Nvidia for you to invest in, to continue growing your portfolio and your wealth, and just expanding that growth for you and your family for the years and years to come. So, is there anything else that I can help you with today? Oh, no. You don't owe me anything for today's visit. You see the fees, they come out of the growth that is in your accounts. And well, we charge a 5% fee. But you know, like you'll see it on your statements. Yeah. But I wouldn't worry about that too much. You don't owe me anything today. Just depends on how much is in your accounts and how much they grow. We'll just look at it that way. Does that answer your question? Yeah? Okay, perfect. Okay, well, if that's all, the champagne bottles are over there if you need to take one with you. But it was so nice to see you again. And don't be a stranger. Come back soon, okay? Okay, bye.